Buffett, how do you determine when to sell a stock? What factors do you consider?
Yeah, well, the question is about selling. And when I started in investments, when I entered Ben's class, I had about $9,800. And the whole problem then was I had way more ideas than money. I mean, I was looking for things. I was going through all the Moody's manuals and digging up ideas and stocks, all kinds of things that were cheap. But I still only had $9,800. So I would buy something, and then I would find something that looked even cheaper or better, and I would have to sell the first thing to buy the second thing. That was my state for a long time. Now, in the late 1960s, I wound up my partnership because I couldn't find things, but that's because the whole market had gone crazy. And at that time, I was working with about $100 million in the partnership when I wound up the partnership. But $100 million wasn't an unmanageable amount of money. It's just that the market itself was just offering nothing. And so I sent the money back to my partners. But as the years have gone by and the capital I'm working with has increased, there's fewer and fewer opportunities. So I never have to sell anything now to raise money to buy something else. I mean, it just doesn't happen that way. I've got more money than ideas. And it'll probably stay that way. So I would say that when you're in a position with relatively little capital, you sell something when you find something that offers you more for your money, or about which you're sure. I mean, if two things are look equally cheap, but you feel one is you're 100% certain you really understand the business, and the other you got 80% certainty, you go with the one you're certain of. If you're in my position, you basically don't sell, or very seldom. Now, looking back, we should have sold some things when the bubble was on because the valuations got so high that even if we'd sold, they were good businesses, but they just were at ridiculous prices. So with hindsight, that would have been the thing to do. But I don't feel terrible about that because the money would have gone into cash and we might have bought them back cheaper, but we might not have. And generally speaking, if you've got a lot of capital, you're not going to find that many wonderful ideas. And if you look at the fortunes that are made in this country, generally they've been by owning a good business for a long period of time. I mean, that's not the worst thing in the world. And that's the way people who joined with me in the 50s and 60s, they held on, a number of them. And they might have danced around, and Berkshire was too high at certain times. They might have tried to sell it and buy it back, but usually that doesn't work very well. So I would say that if you lose confidence in the management or the business, you sell. I mean, there's no sense owning something where the competitive advantage is gone or where you think the management is bad news. You may wish to sell if the price gets too high, but that's more optional. The first two you should do. The third is somewhat optional. But if you're working with small sums of money, and I mean, I was finding things initially that were selling at like 2 times earnings, good businesses. And so if I found something at 2 times earnings and I owned something at 3 times earnings, I sold the 3 times to buy the 2 times. Looking back, I should have borrowed a little money and kept both, but that wasn't my style.